go. Record.
Yeah, perfect.
Okay, good. All right, so this is a local stock here in Australia. So it's trading on the ASX called Viva Energy. So I know energy is pretty hot at the moment. So there was actually a work colleague who sort of got me involved in this one. So I broke it down when he alerted me to it. It already sort of broken a sort of key level. So this is a daily chart.
Yeah.
So I had a look at it. I know this is a little bit messy, so let's clean this chart up a little bit. So I've got so when he's basically traded. I think he traded it around here, and it's run up, and I've let it run. So this is a good lesson in patience, right? So it's broken through. You can see it's broken through this sort of key level, this sort of key zone here.
Yeah.
Very similar to what I've drawn up before with the Renko chart to get these key levels. But you can see here there's a couple of things, right? So when I drew it up originally, you see this trend line that I've drawn here. So it's actually been inching up, and then I've drawn this sort of what was previously a supply zone or a clear resistance zone. I've drawn the line across here. So all I've done is he's got in here. I sort of missed it when he mentioned that he'd taken it. It was sort of probably around this sort of area here. So all I've done is basically Mark likes to trade, the triangles. A lot of the time he sort of sees the market in triangles, which I don't disagree with. So this is a good example. So what I did here was be patient because it broken through, and you see it's sort of zoomed up pretty quickly here. So this there's a couple of moving averages here. We've got the alligator lines. You can see they've opened fully up, and I've got here. This is a 50 period moving average. So it's just a simple moving average. So what I've done is I've actually weighted, and Mark will say this as well. A lot of the times when you break a key zone like this, what happens is 9 times out of 10 it will retest that zone. So what's actually happened is all I've drawn is now Mark draws it a little bit differently, but all I've done is I've taken from the bottom of the move when it's actually sort of broken out to the top of the move, and I've drawn a fib, and I've basically patiently waited for when it's actually retested. And guess what? Bang on that 61.8. That's sort of what they call that golden zone. Now Mark would probably draw it down to, that sort of 50, the 50 zone to indicate where it's actually going to go to. But all I've done is drawn the fib from the bottom of the move to the top, and then waited patiently to retest this zone. It's tested, and I got in at I think it was a 260 mark, and all it's done is actually sort of take off from there. So I've got a little bit of a line drawn here as well, which I quite like. So there was actually a bit of divergence here. So I got in initially in the move, and then I've seen it's actually, the nice thing it's done here is a bit of a double bottom here. It's broke that sort of neckline, and then I've drawn a trend line here, which again it's rebroken. So you could argue here it's look at the move it's done today. That's just textbook, right? So it's come down, it's retested the back of this break of this trend line, and then it zoomed up here. So that's the move that it basically did today. So really nice move.
So you're trading actually at the diagonal line at the bottom. Right? This is going up.
Yes.
The purple one. You're trading in that direction to stay in the upward trend.
Correct. Yeah. So I've waited. So I've basically bought into an area of demand, right? So it's what we call I call it a roll reversal zone, right? So it's actually come into an area of previous sort of support resistance, and then it's turned around and basically retested that zone, then took off. Because what's happened here, when we break a zone, right, what happens is you got a lot of profit taken up here. So there've been a lot of traders that sort of, jumped off up here, then it's reversed, come back down, retested, because there've been a whole bunch of orders that, looking for that sort of early retest here. It never got it, but now it's come back and retested, and then off we go. So this is a fairly extended move now. You can see how it's actually taken off here. I mean, that's a huge move today. That was like 6.8%. It's actually up today. But just a good example of how you can trade the market, right? In terms of just that patience, waiting for the market to come back to the zone, this demand zone, and then out from here. So you can see here, right? Mark would have probably, and Bill would have probably traded probably here, right? So this is basically a bullish divergent candle here, this one.
Yeah.
So that's plotted here. These lines here are basically the divergence candles. So you can see here the other clue that we've got now is, which I use quite a bit, is see this moving average. I've actually color coded it. So and what it means is when price is above and when it's sloping up, it means price is going up. So that's why it's blue. So here it's coming and it's starting to turn. So it's actually come back and touched that 50 moving average and bounced straight off it. Yeah, fantastic move. So now it's just a case of managing the trade, right? In terms of where you get in, where you get out. So I'd be looking to probably trim some off sort of Monday when we're coming around this sort of level here, and I'll probably let the rest just run. But what I've done is the other thing I've done here, as you'll probably see, is with you probably know, Ben, I trade a lot of patterns, right? So when I see a pattern, a lot of people ask, well, where's your take profit, where's your stop loss, etc., right? So the great thing about this one, it's almost like what you call a swing trade, right? Your stop loss is going to be down here. When you enter what I did around the 260, you're really invalidating the setup or the move higher if it closes down below here. So my stop loss was probably around here somewhere, right?
Yeah.
But what you do to mark out your sort of take profit is sort of 2/3 of the way along, especially with an ascending triangle. So they can break south or north. In this case, I'm following the sort of longer term trend. All I've done is 2/3 along. I've measured the distance between this sort of swing low and the actual neckline. And then I've protracted that, just copied that, protracted it up. And there we get, a targeted sort of move. And you can see that lines up with the fib fairly well as well. The fids tell me it's probably going to move up to about here. I like to go a little bit short of that. So at the moment, my target's probably up around that. Initially, that market loves round numbers, right? So that $3 zone. So it got to 295. That's why it's pulled back, right? It's got to that big round number and it's sort of stalled there. But I'm looking for a continuation up through here, probably to around about that 330, 340 mark will be the completion of that pattern, that move. But as I say, I probably will trim some off on Monday and then let the rest run.
Okay.
So yeah, that's a really good one. I guess it exhibits a few things that Mark likes to look at in terms of market structure. Be patient, wait for the neckline. You don't always need to catch that move. Sometimes you just need to wait to retest that zone and then see price action. In this case, I traded off a double bottom. So you can see here, it's come back, it's tested it. Sometimes the market also then retests it again. So it's retested it once, twice, 3 times, and then off. So it couldn't break below this zone. So what we call this is often referred to as a defended zone. So there was basically no one who wanted to sell below this zone here, right? So that's the sell sort of fractal. So there was no break below here, then it's just basically zoomed off. It's done the whoosh, as Mark likes to say.
Yeah.
So so all good. What else I've been trading? The other thing I traded was the DXY. I actually took a trade on the dollar index. That's been really, really strong. Let's have a quick look at that one. Yeah, I think this was pretty much the move I got here. Again, just rinse and repeat, right? So all it's done here, it's broken the zone. I didn't get in. I knew price was extended. I've waited till it comes back. It's sort of bottomed out here. You can see I've drawn the sort of demand line there. It's come back. And this is my, this is basically the OSMA bend, so no secrets here. I've seen that it's gone turned positive right off this sort of zone here. I think I got in here. And basically we had this turnaround. You can see there's a bit of divergence here. This is a stochastic. So a bit of the divergence here. There's also, you can see the momentum's turned up down the bottom. And I've got in, I basically rode it all the way to the top, just shy of here. So yeah, good trade. But you can see it sort of topped out here. That's where I got off. I don't really, I take, once a minute, I look for the next zone, which is that fractal there. So I've simply jumped in here. I mean, technically, you wouldn't necessarily get out of this, but that's just such a key zone. It's topped out. Then I was taking profit, a bit below that. Technically, Bill would have probably trailed here. So technically still in. That's just below the alligator lips. That's where, we'd maybe have a trailing.
Yeah.
So that was one I traded. The other one I traded was US oil. Actually, I took a long position on this. I'm still in this trade. So it's bottomed out, again, fairly straightforward. You see my lines drawn here. So this is, it shouldn't really be I'll redraw that. It should be a blue sort of support line here. So you can see this, it hasn't really, it came down, but then it's bounced off here. I took this trade because it was dollar. I saw it's almost the inverse correlation, right? So we had the US dollar at that, excuse me, that sort of supply area where it was likely to pull back. And I basically used that as a, I guess, a signal to actually get in long oil. So I'm still currently in that trade. And Bill calls this as the I guess the gambling zone or the sort of trading zone, rather than investing zone. So I basically I've taken it about here. I think the stop loss was sort of down here. It might actually been off this one actually. I think is where I traded it. So yeah, and I had a fairly wide stop. I gave it a fair bit of room because I was confident that with the US dollar weakness coming in, I've sort of traded it here. I'm not expecting it to do too much, but if it certainly gets back into this zone, I'd be looking to short it again. But yeah, this is still in that sort of gambling zone a little bit. So yeah, but I took a small position. I sometimes when I'm counter trending, I'll take a fairly small position. I'll take a stab at it because I'm quite happy, taking sort of really paper cut losses and then letting it ride up. So this one's still in that zone where it's like, no, it's a bit iffy. So you can see there, this fractal here hasn't really been broken yet. It's testing it again. But yeah, but you can see there once you go out to the longer time frame, it is a bit range bound here. So it's been a bit of a, it's kind of stopped here. Why is it stopped there? Well, look at this zone here. That was demand. It's all kicked off from this demand zone. So you could almost draw a line there in the sand and say, look, if it breaks below this level here, see this zone here, it's never really a, I treat this as more of a zone, and this is why I liked it. If it breaks this level, then you'd be looking for short. So you'd be looking for something like, let me just draw that out. You'd be looking for a conservative entry. If it breaks lower, you'd be looking for something like this, back up to retest that zone. So let's get this going. Something like that. So up back to test that sort of zone here. And then what you'd be looking at in a lower time frame is a sequence of higher, lower lows and lower highs from a lower time frame. So you just zone in that level. And you'd be looking for the divergence in the direction of the trend that you want to trade. So this is it's an important sort of point. You're always looking, well, certainly I'm looking for a lot of the time divergence in the longer time frame trend. where you want to, when it's broken that level, wait for that patience, wait for that retest. The conservative entry is basically when you see the lower highs, lower lows, that's when you start to enter and look at, okay, where are we going? So where's the next level? Well, next level is probably here, first stop, and then you've got this sort of strong area here. So all of these demand zones is going to be problem points for it. So first one is probably this one here, where you'd be trading to. But you can see that the risk to reward when you zone in and focus on maybe one or two instruments only, you kind of know, you get a feel for where the zones are. So you can see if you're trading, I don't trade oil a lot, but I was sort of dialed in on these zones. So I knew when it was coming down here and reacting off this price, coupled with the dollar index topping out, I went, look, that's a fairly good trade. And I tend to choose, have at least 3 or 4 reasons stacked in my favor for entering a trade. So yeah, I focus on zones and then look for something to trade in that direction using divergence. So yeah, you can see the divergence here. I've got a nice indicator actually, doesn't allow you to second guess, actually tells you where the divergence is. This is just the OSMA, the awesome oscillator, the AO, and it's actually marking the actual divergence on there, much like what you guys have got on the OSMA. This is the OSMA down the bottom. This is the one I created myself. So again, there was a number of things in my favor. We've come into a demand zone. What's happening? We've got, divergence, bullish divergence in the area, in the zone that you want to take along from. That's not to say this is going to fail. This may fail, right? But at the same time, I've taken a fairly small position. So yeah, so that's how that's one.
Normally you would exit on the SMA 50, no?
Not necessarily. Sometimes I'll move my stop so that it's maybe under here. So if I'm getting in down here, I'll sort of move my stop. I'll start moving my stops, or I'll start scaling in. I'm not the best at scaling in. I have to admit that's one of my things that I'm trying to work on. It's a bit easier on the sort of longer sort of time frame here, whereas you can jump into maybe a 1 hour chart. If the trade is starting to go in your direction, right, and you've taken a small position, that's where you dial into maybe the sort of smaller time frame here, and then start to look for, in my case, it'd be certain patterns where I'm quite comfortable then to jump in again. That's something I'm sort of working on in my trading style. So yeah, I don't scale in probably enough. That's probably sort of next level for me, but you can see there when you jump into the sort of 1 hour chart, you can start to then see some of your zones. You've got higher highs, higher lows. So you've got your sort of, let's draw this out as well. So you've got, positions like here, here. Where's that? That's a bit annoying, isn't it? It's coming down again and then moving up. So you're looking to, you're seeing the sequence here of higher highs, higher lows. So you'd be looking to maybe scale in once it breaks this level. This is a bit of a problem zone for it at the moment. It's pulling back here, break up here, then you're in again. So it's it's the same patterns. Doesn't really matter what time frame you trade. I quite often trade on the lower time frames. I'm probably more of a scalper, to be honest, but but that's the same process. Just trade the chart you're on, but yeah, that's how we'd probably look to scale in on the lower time frame, knowing that the higher time frame is starting to go in your direction. There's a bit of a double at the bottom there. That would be enough to even get me in again, to be honest. You can see the pattern. I trade a lot of patterns. I just use it for a bit of confluence. But yeah, you can see the divergent bars here. It's looking pretty bullish there. So yeah, what else did I trade? I'm trying to think of what else I trade. I traded, well, here's a really good one. This is one I'm still in actually. Again, all pattern based. This is a little bit of a cleaner chart. As you can see, I really like the price action here. Again, same process, right? Looking at key levels. This one came down, basically double bottomed here. See this pattern here? It basically reversed. So it's come down pretty hard, this one. Now there was a bit of sort of fundamentals on this one. So it's a lithium company here on the market. So when I seen it had done this double bottom, and again, it was a colleague that had seen it in the news and it had done a bit of a spike. And I basically waited on it. So I waited for it to break through here. It retested this zone, which is again what I call a role reversal zone, where it was previous support becomes resistance, then it's become support again, and then it's basically taken off. So how I traded this was I actually took pretty much all of this move, and it went up. I don't know, it was like 30% in the one day. I mean, it was just crazy, and it did. You can see there it went to that full sort of move again. So you see how accurate that is. All I did was I took the double bottom here was the projected move, which is there. So that was the, if you just take that over, so that was the neckline where it's broken, and that's the bottom. So all you do is you basically project, I just in TradingView, you just copy paste, and then that's the same move. And look at that. I mean, it's gone to the actual cent on that one, and that's how ridiculous it is when we understand when you see a structure play out, or when you see a pattern play out. Generally, this is a good way to identify your take profit levels. Bill does it a little bit different. You can see here the alligator, he would have been probably in and out here. So he'd be in here, out there, probably in again, sort of here, then out again. So he'd have taken probably multiple trades here. But I've basically taken the one trade. So you don't always need to be in and out necessarily. This is on the one out, of course. I traded it pretty much on the from the daily, and then zoned in on these levels, and I'm still in. So what I did was, what I'm finding works quite well for me is when I get that move, I'll take maybe, I don't know, 70% of the trade off, and then I'll let the rest run. If I know it's looking fairly bullish, you're going to get the pullback, I'll let the rest run. So I'm still in this trade. And I basically trailed it when I saw this flag pattern here, and I got out probably about here, I think. And I left the position, so I left on some to run. When I saw this flag pattern, it gave me a little bit more confidence as well, because it's a fairly bullish sort of pattern. And I've got like a stop, sort of, guess, a mental stop round about here, this 158 level. But yeah, look at where it's finished. At the moment, we've come back down a little bit, but I'm still in this trade and holding, so I'm quite happy to hold for the minute. I mean, it's come off a little bit more today, but yeah, quite happy to be in this trade. They did sign up a deal, I think it was BMW, so for sort of first choice on lithium, battery grade lithium. So yeah, bit of a play there. So there was some, I guess, additional factors there in terms of not just looking at price action, but looking at what the company's doing. So a little bit of the fundamentals. Sometimes when you can mix the two and get them sort of aligned, it works out really well, which was the case in this one as well. So both have done really well. So, but that's how I traded them.
Okay.
So any questions on any of that, or is that fairly clear? Not sure if anyone's got any questions.
For me, it's clear. Maybe Ollie has questions. Maybe he has no mic. Okay.
The other one I was going to show you. Yep, sorry.
Can you hear me?
Yeah, I can hear you. Yep.
Oh, okay. I'm not really so familiar with everything that I'm seeing. So it's just a lot to take in.
Yeah, sure. Ask away.
Okay. The first I think I don't know what it was. ADX. Yeah.
The stock?
I don't know. Yeah, I don't know where it is.
The DXI? No?
Oh,
One.
VA.
VEA, oh, it's a stock. So this one's a stock. So
Oh,
when,
this
yeah.
one.
So this is a stock,
One. Yes.
but the process is exactly the same. So what Mark's trading, I'm using all
Okay.
the same indicators. It doesn't matter whether you're trading Forex, trading commodities, trading indices, or trading stocks. It's all the same method, no different, all the same. The only difference is I'm just for, I guess, education purposes, I'm using TradingView as a method to actually show the method, but it's the very exactly the same as what you've got in NT4. We've got the alligator lines. I've got an additional moving average, which I just use for, I guess, a little bit of confidence in terms of direction. But everything else is pretty much the same. I don't have the blocks that show the demand and support. I've just got these sort of little indicators here that tell me whether it's a demand zone or a supply zone. But most of the time you can draw those out as well on the chart like I've done. But this is the awesome oscillator, so that's the AO. I've just got a version that actually shows me the divergence on the actual indicator itself. And I've got divergent bars as a separate indicator. Again, that's sort of quite nicely coded by the guys,
Alex.
yeah, by Alex and Ben. And I've just got it as a separate indicator down here, so it doesn't clutter the chart as such. The white bars are swap bars. Again, Alex has coded that in NT4. So everything you see here, you've all got in NT4. It's no different.
Okay.
And I've just got my fractal, so no difference. So no confusion here, hopefully. What you see on the chart right now is basically what you have in NT4 that Alex and Ben have provided. Yeah. So this is the the OSMA effectively. I've coded it a little bit different. It's just I'm quite a visual person, so yeah, I've just coded it a little bit differently in terms of the red. The red dots is where it's basically gone below the zero line, and blue is when it's crossing the zero line to the upside. So I use that as I guess a momentum indicator, which tends to work really well for me. You can see here, and that's where Mark says when you get the two to line up, it's really nice. You can see there the OSMA is basically painted blue, so the momentum's basically to the upside, and so is the AO. And we've got a bit of divergence here, obviously, in the stochastic. So not that Mark uses that one, because it's not a bounded indicator, but it is quite good for when you've got a sideways market if you want to trade within a certain range, and that's where that sort of works quite well. So, but yeah, Mark doesn't use that. I don't believe he uses more the OSMA and the AO for, yeah, correct, for strength, and this is more a momentum sort of based indicator, which works very well. So a lot of the time, Mark will say, well, you want to buy sort of here when you've got that strength. So when they line up, see this one, that's you know, that's a really good entry there. It's come into, why is that a good entry? Well, it's that basically if you looked at that on a, you know, I can actually take what Ben and Alex have and apply it to stocks. So so a lot of, in Australia, we can actually trade what's called CFDs. I don't think they're banned in the US because I think they didn't play very well with it. They're a bit naughty and broke a lot of the rules, but we can basically go long and short on stocks. So what I do is I take basically the setup that's on NT4 and basically apply that same process over stocks, and then I can trade stocks long or short. So for example, I can trade Microsoft here and Apple on the CFD, which is called a contract for difference, which means in short that I can actually short it. So I think there's a lot of trading in the US is banned CFDs where you can't short the stocks, but here you actually can. So yeah, so that works really well. So yeah, and you can trade it through NT4. So there's a number of brokers here that allow you to trade stocks using NT4 as the platform for entries. So yeah, we can play it both ways here. We can go long on and short, which is really good.
Okay. And this is like one of your favorites,
Mhm.
the VA.
The VA, yeah. Well, this is one I've basically traded. So all I was trying to do here is basically take everyone through why I traded it, how I traded it, what were the various things I sort of looked for in terms of entry point, and an exit point as well. Like, you know, you'd be looking to sort of trim some, take some profit probably up here, which is the, you know, the high. I'd be probably taking it a little bit lower here. As I said to Ben, I'll probably trim some perhaps on Monday, because I had a fairly serious move today, up 6.8%, which is good. Yeah, it was a bit of an energy play. We know what energy is in demand at the moment, and prices are quite high. So yeah, that was a play on that one.
Okay. Okay, thank you.
No worries. I don't think there's much else I've traded. I have been short in indices, I have to admit, but that was on much lower timeframes. I posted actually something to Mark. Let's see if I can get the setup. Where did I go? I was on a fairly low time frame. A shorter, I think it might be. Where are we here? 26. Let me have a look at when I shorted it. I sold it when was that? The 22nd. 22nd was back here somewhere. Yeah, here. I took this trade here, I believe. I was a very, I think it was on a 5-minute, 15-minute. Let's try and get back to the 22nd. There's some different example. Yeah, it was here. Where did I trade here? I think it was this move. Yeah, it was this divergence here. I took this entry down to here, I think it was. So it was I do a lot of short-term trades where I might be down in a 5-minute, 15-minute. So on these trades, what I'll do is I'll look at the 15-minute, I'll see a setup, then I'll basically dial down to a 5-minute. So I use maybe a higher sort of time frame for confluence, and I'll jump down to that lower time frame and just look at the price action there. So I know this doesn't, where's this 26? Yeah, it was something like this where I dialed it. So it's come up here, probably in something like here, knowing that the setup's on the 15-minute, 15 minutes, and I would have basically traded it down. So sometimes I'm just looking for this quick sharp move, and then I'll trail it. I'll trail it down. I don't often. What I often do, and what everyone's got a different method, right? What I find works for me is I will run a move down, and when I think it's going to turn, I'll maybe take 70% of the move off the table. So I'll basically bank profit, then I'll maybe set the stop a little bit higher and just let it run. I'll be happy to, you know, take a paper cut loss. So I allow it to run, because if you see here, like if you'd taken this move here and got in, let's see this area, even on this bar here, right? If you'd taken that move, it's gone down here and you played it out, you let it run, take profit here, 70% off, set your maybe stop for where your entry was, so you're back to break even. That would have run down to here, and it would still be going, depending on, you know, you could be moving your stops every, you know, 2 fractals back, or however you want to play it. It might be, you know, you use the teeth line here, this middle line as a get out, as a close above, which might be here. But then you know you grabbed a really nice move, but you're getting, it's all about this entry point, and this is what Bill's all about. It's all about trying to get in early in the change of trend and then sort of ride the trend. Bill would be basically adding these fractal breaks. I have found that in my own style of trading, I don't tend to do that well when I add it fractal breaks on a lower time frame, such as a 5 minute. That's just a personal thing. It's something I'm working on. I find it a lot easier if I pick something on a let's say a higher time frame, like say a daily, and pick the move in the direction. So in this case, it's looking, you can see I've drawn levels here, right? So I'm looking at, this is a sort of rising wedge, prices broke this sort of level. Then you'd be looking to go down into a, lower time frame, say a 15 minute, then take fractal breaks, down that way, but based on the daily.